Welcome back everyone, Jeff here with another video. So we did see another small sell-off in the market today, about 159 points on the Dow, about 144 off the NASDAQ. The NASDAQ, that's a tech index, it's getting hit the hardest. It's getting hit much harder than the Dow or the S&P. S&P dropped 0.81% today. But there was a little bit of a rebound at the end of the day. And I just want everybody to know, this is a nice, healthy sell-off, okay? Anybody that's been in the market a while, been in the market maybe 2 or 3 years knows this is a very healthy response to massive amounts of growth. Typically, the way it works is you take about 2 moves forward and 1 step back. And so the market's selling off for a couple days, guys. You have to understand this is a good thing. Very small indication that stocks are a little overvalued. We just got through earnings season, and I'd say probably the biggest catalyst of this last really big run was that Tesla and Apple stock both split, and they had parabolic movements into their split even for a day or so after. So everything is just overheated. And one of the best investments you could have made in 2020, or even really going back to its IPO in 2015, has been Shopify stock. This one is up 3,350% since its IPO. The crazy thing about Shopify, guys, it never really got the IPO hangover, okay? It pretty much traded flat for its first 2 years on the market though, and since that time has ran into the hundreds, now has even traded itself into the $1,000 mark, and most analysts believe this stock is very undervalued where it's at. And roughly 1 year ago, I published a 1-year price prediction video on Shopify stock. And this time last year, Shopify was trading around $380. It has taken a couple of dips, especially with the COVID-19 crisis, and it had kind of an end of the year sell-off. Since that time, has jumped from $250 to $300 a share, like I said, all the way up over $1,000, and it has a 52-week high, $1,100.46. So here's what we're going to talk about in this video. This is one of the most exciting investment opportunities I really think there is on the market. I put it right up there side by side with Amazon and Tesla. If you have a growth portfolio, I really think Shopify should be in there. We're going to talk about from right here at $970, is Shopify going to make it to $1,500 by the end of 2020? So I'm really kind of putting the pressure on because we only have 4 months left in the year. So this stock basically has to trade up $500 per share. I think it's more than capable of doing it. The main thing with this company, guys, is earnings and guidance. That's how this stock has went from $20 a share up to $1,000. So let's get into it. Before we get started, make sure to drop a thumbs up on this video. I appreciate all the support, and make sure to subscribe to the channel if you have not done so already. Alright, let's start first with fundamentals. There's a couple things I want to point out as to why, Shopify might not make your list. Like I said, if you have a pure growth portfolio, I think this stock has to be in it. But you will probably find a few of these metrics a little bit off-putting. That's part of being an investor. It's part of investing into these platforms that grow so much. Sometimes you're looking a unprofitable company right in the eyes. Okay, so right now at $973, Shopify has a $116.15 billion market cap. It's already extremely big. And if you would like to know how big Shopify already is, these companies are listed and ranked with the size of their market cap. As you can see, Shopify is already bigger than AMT, Citigroup, IBM, Lockheed Martin, JD.com, Zoom. It's even bigger than Wells Fargo and Starbucks. So going back up in the other direction, like I said, it's very close in market cap to Honeywell, Lowe's, Philip Morris, and Charter, okay? So this is a very, very large company already that just continues to grow. Now again, we run into this a lot with these very high growth, high flyer type of companies. Unfortunately, Shopify is not yet profitable. So they have negative 3% profit margin, negative 4% operating margin, and they're negative about 1% return of assets and return on equity. So although this stock has been an absolute firecracker, if bought and held this stock during any time over the past 5 years, it probably really stands out in your portfolio. It's not yet quite a profitable company, but that's pretty much where the bad news ends fundamentally. And as you can see with some of these metrics, it's very close to being profitable, just not quite there yet. Now, like I said, it starts to get a whole lot better. The short percent of float, only about 2%. That's a very good metric. The short percent of shares outstanding. Not a lot of people short Shopify. And you would be kind of crazy too, just simply off of how fast this stock can move. What that tells me is hedge funds keep buying into Shopify more and more and more. That's why you're seeing the big moves in stock price year after year. It really kind of benefited from COVID-19 where everybody was working from home. This type of platform actually seen quite a bit of growth during COVID-19, but not a lot of people holding this stock short. In my opinion, you'd be crazy to hold it short. The quarterly revenue growth, 97.3%. Fantastic metric. And lastly, let's take a quick look at the balance sheet. This company has nothing to worry about. If a recession was to happen, they have $4 billion of total cash and only $153 million of total debt. That is a fantastic ratio right there. Having so much cash, such little debt. Looking at that, it has to go into the same category as Facebook stock, where Facebook is one of the few companies that has so much more cash than debt. So really the only negatives we can pull on Shopify fundamentally is that they're still not quite a profitable company, but they're very, very close, and the growth of the platform cannot be denied. All right, let's look how they fared on earnings and guidance the last quarter. Last time they reported earnings was right over here on 7/29. Their EPS actual was $1.05, and look, they beat by $1.03. Huge when we look at it on charting. We'll do that in just a moment. Their revenue actual $714.34 million. That beat by $200 million. Just a massive beat on revenue. They were expected to come with about $510 million, somewhere in that ballpark. They beat by well over $200 million. That is, COVID-19, a lot of people staying home, working from home, really gave this company a huge boost. Their upcoming earnings, that will be for October 28th. That's their estimated report date. Their EPS estimate is about 47 cents. Revenue estimate about $641.56 million. We go back to Q3 of 2019, something very, very important I want you all to pay attention to right here. As I always say, guidance is a lot more important than earnings, and Shopify has only really taken one downward turn in EPS guidance in the last 4 earnings reports. So they did have a miss on Q3 2019, but they guided up. So in my opinion, even when a company misses, but they deliver strong forward guidance, the stock is still very undervalued. Right here on Q4 2019, they had an EPS beat, but they guided down on Q1 2020, and from there they've guided up 2 different times, and both earnings reports have been stellar, massive beats on earnings and revenue. So this company is bringing it on earnings quarter after quarter and year after year. I will not be surprised really to see their quarterly revenue start being around $1 billion very, very soon. It's grown so much from a few years ago when they came onto the market. Now, I think there's a couple bullish catalysts that can really push Shopify to the $1,500 mark. I'm not guaranteeing you that this is going to happen before the end of the year. I do think it's very possible if we do kind of start seeing more of a bull market. We had 2 days of sell-off at the end of last week, and I think if that reverses, we start moving back into a bullish direction. There's really no reason why Shopify shouldn't get to $1,200, $1,300, and possibly $1,500 before the end of the year. A new firm is positive on Shopify, Atlantic Equities. This article was published on August 26th, as they initiated coverage with an overweight rating and assigned a price target of $1,150, which oddly enough, Shopify has already touched that price target and sold off. I think this is important to talk about now. Even where it's trading at right now, it is still down about $100 from the average Wall Street price target of $1,084. And then keep in mind too, the highest price target on Shopify right now is from Rosenblatt Securities, and that is $1,400. So I'm going a bit further. I'm saying there's no reason why this stock can't trade to $1,500. The only real problem there is analysts can't keep up with how fast this stock does like to move. It could be at $1,500 in a matter of weeks, especially if they get to that next earning report, and regardless if they beat or not, but show strong guidance again for quarter 4, I think you could really see this stock move a lot closer very soon. And 2, this also makes a wonderful case to be invested in not only Shopify or Facebook, but also BigCommerce, ticker symbol BIGC, as Facebook Shop is a new destination in the Facebook app that echoes its Instagram Shop feature that was added last month. And so while it's expanding checkout on Instagram to all US businesses and creators, it says allowing users to complete a purchase in the app with just a few taps. Facebook has partnered with BigCommerce as well as Shopify to enable the checkout, or businesses can use Facebook Commerce Manager along with these shops features. So Facebook partnering with both BigCommerce and Shopify, I think that's another reason collectively, if you have a growth portfolio, perhaps to have at least 2 of these names, definitely Facebook and Shopify. You also might want to think about adding BigCommerce. I personally don't own a position in that company yet. I don't quite know enough about them. I have been keeping an eye on them on my watch list. Some of their daily stock moves are very, very impressive. That's all I got for the video, guys. Make sure to go down to the comments, share your thoughts and opinions on Shopify stock. Again, too, I think make sure you add BigCommerce to your watch list. The ticker symbol is BIGC. And as you can see, in 3 months' time, the stock is already up about 55% and still continues to grow. This is a company I don't know if I'm ready to invest in yet. I'd like to see a little bit of a dip. I don't know as though they're going to get much of one. So thank you as always for watching the video and have a great day.